Everybody, welcome to this webinar. I'm Shane Smoleny from Wolftrader Futures, and we're going to be talking about the S&P 500 today. We're also going to be talking about news and events with the service. We're going to be talking about just the metals markets, the crypto markets. So we got a good show for you today. I'm going to let a sound check run here just to make sure everything's coming through okay, and then we will be underway. All right, so it looks like we're doing pretty good here on sound, and I will get started here. Okay, so let's get started. So first of all, if you want to reach me, you can reach me at shane@wolftraderfutures.com, or you can reach me at shane@wolftraderfutures.com or www.wolftraderfutures.com. This is the YouTube channel here, so if you like the video, go ahead and like and subscribe. And then we also have a Twitter here at Wolftrader1 FUT1. I highly recommend that you subscribe to that if you want to get live updates throughout the week. And I also message some of our subscribers there. That's not our premium Twitter channel, but I do communicate there too. So if you're looking at, if you're interested in looking at some updates, that's the place to go. All right, so the agenda for today, we're going to talk about news and events of the service, what's going on with that. Frequently asked questions. This is a new topic that I'm going to be touching on here to go over some questions that people ask me throughout the week or that I think you might have a question about. We're going to talk about some risk tolerance today on the easy timer and the fast fed. I'm going to talk about some new things that I'm doing. I'm working on some really strict break evens. So that's what BE is. BE is break even. So that's what this is here. We're going to talk about the gold standards as we always do, and then I'll talk about the ETFs and give a brief market update. So that's the agenda for today. For those of you who don't know, we have many different services here, many different newsletters. We have S&P, metals, energy, currencies, cryptocurrencies, Uranium newsletter, which is pure Uranium astrology, not necessarily to do with the markets, but very interesting. I'm going to show you a sample chart today, actually, of an athlete, an Olympic athlete. Stock ETF service, this is new. We just started this. This gives daily updates on the stocks and ETFs. It's doing very well. We still have a few bugs to work out here, but I think it's off to a good start. The gold membership is all of these. It's a bundle. If you want to take advantage of all the newsletters, that's the gold. And then we have the platinum service, which is a live Twitter feed throughout the day, which is separate than the one I told you. We have trade services here, fast fed, easy timer, the Fedges ETF, which is in the newsletter service, pairs trade, K2 trader, and then of course, grandfathered in for all future services. So anytime you sign up, your rate is locked. As long as you stay signed up, that's your rate. The rates typically do go up through time because I add more content to what we're doing. This is a look at some of the different symbols we cover with our different services. S&P on the metals, copper, gold, silver, platinum, energy, natural gas, oil, heating oil, gasoline, currencies, US dollar, Canadian dollar, British pound, euro, Japanese yen, Australian dollar, euro dollar, cryptos, Bitcoin, Ethereum, Ripple, Litecoin, corn, 10-year bond, Apple, Tesla, gold miners, Caterpillar, and we also do have Bank of America now. So we've added to this list, and Broadcom also. So I gotta update that list just to show everything that's on there. But things are going well. So let's talk about this. Now, of course, when you have so many different symbols that you cover, you know, some symbols have good weeks, some symbols have bad weeks. Everything doesn't always do well all the time. But I think overall, the direction is good with what we're looking at here. So let's keep moving here. All right, so disclaimer. Just want to let you know about the disclaimer here before we get started. Trading commodity futures involves substantial risk of loss. You guys know this. Past performance is not necessarily indicative of future results. Even if those are live results, documented results, things can change. Things can be working, things can stop working. This is designed to be an educational service, designed to be a supplement to the book, A Trader's Guide to Financial Astrology. I wrote that book with Larry Pesavento, who has the show Trade What You See on TFNN. And this is separate than my firm. I'm a registered CPO and CTA. I have a separate firm, which is Trading Ridge. Wolftrader Futures is a newsletter. They're totally two different things. So just want to clarify that these have nothing to do with each other. This is a separate company. The data used in the astrological planetary data is public information already reflected. So everybody sees the same thing at the same time. That's basically what that means. It's not like I'm getting information before anybody or distributing it. Everybody gets the same information at the same time. It's a newsletter. It's a broadcast. There's nothing personal here about advice that I give. Warning about using fragments. This is more important than ever. Wolftrader is a forecast. This forecast information is a combination of Fed info and cycles. So we're constantly updating the two, and they can change from day to day. I could see something last Saturday is different than this Saturday is different than the next Saturday. So just be careful about hearing. People have biases. Like you might be, I want to be long on gold, or I want to be short on the S&P, and they listen for any little confirmation bias that goes along with what their viewpoint is, and they grab that out of context. And so what I'm trying to say is be careful, okay? This stuff can change. It can change during the day. I did the radio show on TFNN the other day, and after the show was over, a bunch of the ETFs changed. So this stuff can change minute to minute, and I just want to make that clear. I don't make forecasts at the beginning of the month. I mean, I do make forecasts, but I don't just say, this is going up, till this date. I always put the disclaimer in there. It depends on what the Fed is doing, and we follow what the Fed juice is doing. So when the Fed juice is in agreement, we can make forecasts. And I made one this month on the S&P. I make it every month on the S&P. But the main focus is the day-to-day focus is on what the Fed is doing. Terms of service, I never share your personal data. So just so you know, if you sign up for the email list, I don't sell it. I don't share it. So that includes any company, any lists, buying and selling lists. I don't ever do that. So each person must physically sign up. You can unsubscribe at any point from the free list, from the service. There's no contracts. There's nothing. There's a 7-day trial. So I just want to make that clear. Terms of service. My only terms of service is that you understand the risk that's involved. So that's the main thing here. And so let's keep going here. All right, so this is a little small here. Let me make this bigger. So here's some news and events in terms of what's going on. The stock and ETF service is running very well. I'm happy with how it's going. Some symbols are doing really, really well. Some symbols are not, but they're all doing decent. Okay, I don't have anything that's tanking. I have a few symbols that are running essentially at break even, but some of these symbols are really doing well too. So we'll get into that. The S&P Easy Timer, I'm working on keeping that at a low drawdown. So this is different than before because I've talked about Easy Timer being a timer that goes on during the market hours, primarily in the morning. It starts around 7 o'clock and it goes to about noon. And the only issue with that is when you drop in during the morning on an intraday, you tend to get huge volatility. So what I'm trying to do here is to reduce the volatility by keeping those drawdowns low. So I just wanted to clarify that this is a new strategy that we're doing. And the only problem with this, it's not a problem, is just you get a lot of trades that tend to just break even all the time. So it's a different way to look at it, but we reduce the risk dramatically by doing this. So this is something that I think is important because we're really going to be focusing on risk now, and what's going on here. So that's what's going on there. I will be speaking in the Money Show on August 25th. It's a virtual show, by the way. I don't have that here. I should type that in. So the Money Show, August 25th. I'm going to show you how to sign up for that. I'm going to send you an email too. If you want updates on the Money Show, it's free. You can go. It's virtual. August 25th, 2021 at 1 o'clock p.m. to 1:30 p.m. We're going to talk about seasonal patterns of metals and how to time seasonal patterns of metals. So that's coming up. Let me see if I can pull that up for you actually really quickly here. Okay, so here it is. So you can go to the Money Show. You can register. It's free. It's virtual. So this is just a little bit of my background here on the Money Show, moneyshow.com. You can go there. This is a virtual expo on August the 24th. Sorry, August 25th. I'm speaking. I just showed you. And so this is going to be on how to balance the Fed use with seasonal patterns. So we're going to talk about that a little bit today, that the seasonal patterns don't always work out as planned. So the markets can diverge ahead of them or below them. And like we see with gold right now, gold is diverging below the positive seasonals. So I'm going to talk about how to balance the Fed use with the seasonals. And I think it's a good seminar. So come check it out. We would love to see you there. So that's themoneyshow.com, and it's the Money, Metals, and Mining Virtual Expo on August 24th to the 26th. I'm going to be speaking on the 25th. So check us out. Drop by and see that. It'll be good. It's going to be different than anything that I do on this weekly webinar. This weekly webinar is really a tool shop that I do for a lot of times for subscribers to ask questions, just to kind of give you an update where we are with the service, because things change and things update throughout the week. So that's just what's going on there. So like I said, we're remodeling the other systems too. So for example, the K2 and the Fast Fed, I'm looking to remodel these to focus on break even. Okay, and I'm going to show you some examples of this in a minute, but the K2 has kind of been on the shelf for a week or two. Um, in the Fast Fed, I'm going to make both of these focus on having break evens. Okay, similar to the Easy Timer, which I'm going to show you. All right, here's another big one. I was able to get this done this week through the help of my programmer. We are going to have streaming crypto now. So what that means is that, you know, I have Bitcoin futures right now. Okay, so that's what I've been tracking the Fed use on, but I don't have live streaming crypto. What we're going to have now is live streaming crypto. So what does this mean? Well, number one, it means we're going to have a longer history for the Fed use, and it's going to be more accurate. So one of the issues with Bitcoin is that I've had limited history on that. So I typically need about 10 years of history on the Fed use to get a very accurate signal, and we have very limited with Bitcoin. So the Bitcoin Fed use has not been quite as accurate as the other Fed use numbers that we look at. I think because we haven't had enough history. Now that's going to change. We're going to have more accurate history on this. What that also means is that we're going to be able to have Fed use now on Ethereum, Ripple, and Litecoin. That's huge, guys, because I've essentially been downloading this and upgrading this by hand every week. I do this every week. I go to different websites, I download data, and I create these charts at the end of the week. When I do the statistics and everything, it's a tedious process. I go through this. It takes forever. Okay, but now we're going to have streaming crypto, so I can put a Fed use now on these other coins. So it's a big deal. Um, so if you want to see different coins, I'm looking into Cardano, but the point is, at the touch of the keyboard now, I can load these charts and I can start analyzing them live as they update. But I don't have to download this stuff manually. So it's been, like I said, a very tedious process. But that's how things are. Things go in steps. You have to kind of work for things to get things going. They don't always come easy. Okay, so I've really had to fight hard to get this crypto up for you guys on the crypto newsletter, but now things are going to get easier. We're going to start to see some more data and more Fed use on these indicators coming in here. Okay, so that's coming up. The microcycles were added. I updated those just so you know. Microcycles are small cycles that look 2 to 3 days, and then the August newsletters are available. They should be like now. That's from last week. They're available now. So if you want to download these August newsletters, they're available now. 7-day trial, and check it out. I think it'll be worth your time. Even if you just decide to go through with the trial, you're going to get a lot of good information there, even just with the trial. And you do get a live component with all the newsletters. So like right now in the metals, we have copper, silver, gold. But I will be looking to add more. Like I said, on the crypto, I'm going to start looking to add Ethereum, Ripple, and Litecoin now to the Fed use. So this is big. This is a big announcement because, like I said, I've been struggling with this crypto to do all this by hand, except for the Bitcoin futures. And now we're going to have more data and streaming. So it's a big deal. All right. Frequently asked questions. Frequently asked questions. So I'm going to answer your questions here in the chat as we go through this webinar. But I do want to go through some frequently asked questions that people have. So the first question is, how do we know when a signal change comes? So people ask me, how do I know if a signal change is coming? Well, number one, the first thing that you do is you look at the chart. There's going to be an arrow on the chart with the date of today that will show you that it's changing, okay? So you would see that on the chart. Number two, on the closing bell, it will show you that the signal is changing today, and it'll say the number of days in trend is 0. So that means it's just starting. Number three, the platinum trade board. You will see that a change of signal is coming. And then if you're a platinum member, you're going to get a notice. You're going to get a message to your Remind app. It's going to come to your phone as a text, okay? Any questions about that? Just let me know. We'll keep going here. All righty then. Number two, I know you can't read that at the top there. What is the difference between the closing bell and the platinum trade board? So these are two different things, similar, but a little bit different. The closing bell is a projection of the market at the close. So if it says, you know, the signal's a sell, that means that's what it's going to be at the close. The platinum trade board is live. So for example, if the signal's going to go into a sell at 4 o'clock, the platinum trade board will say buy all the way until you get to 4 o'clock, and then it will change. And then I'll send you the Remind app, okay? So they're a little bit different, okay? So platinum trade board is for platinum subscribers. It's live updates. So when you look at that board, when 4 o'clock hits, the signals change and the trade entries. It'll say long at this price. It'll say short at this price, or whatever it is. It'll flip at 4 o'clock. So it's live. So that's the difference there. All right, number three. This is a big one. It's not exactly obvious. So let me explain a little bit how this works. What time do the signals change? That's a good question because most people would assume 4 o'clock. So signals occur on the close, but what does that mean? Well, each symbol is different. Futures close throughout the day. So before we went electronic, we used to have a pit time, right? So, you know, copper is 1 and gold is, you know, 130 or whatever it is. Silver is 125. Oil, natural gas is 230. Of course, they keep trading, but I trade with the original pit times because those create better trade signals, okay? Stocks and ETFs close at 4 o'clock or 1600 Eastern. Everything here is on the Eastern time board here. So that's what it is. Any questions so far? Just let me know in the chat and I see we're already getting into Delta talk here, vaccine talk. Okay. All right, I'm going to keep going on if we don't have any questions. So this is what it looks like. So when you see the closing bell, just to clarify how this looks. So over here, this is the market class, the symbol, the open time, and the close time. Okay, the futures open at 6 o'clock Eastern. The dollar opens at 8 o'clock. Okay, so that's what this is. The euro is a weird one. It opens at 8:20 in the morning. That's just how it is. Okay, I have to set these time zones. So that's what time these open. These are the closing times. Copper's 1 o'clock. Silver's 125. Gold is 130. Corn is 220. Natural gas is 230. Oil is 230. The US dollar, I have it closing at 4. That's just what I chose to use. Most of these currencies, 3 o'clock. So 1500, Canadian dollars, 3 o'clock. British pound, 3 o'clock. Euros, 3 o'clock. Australian dollar, 3 o'clock. Euro dollar, 3 o'clock. The bond I close at 4, and the S&P I close at 4. Okay, so that's just how you read those times on there. So just to help you understand what's going on there, that's what it is. So it's not just, you know, 4 o'clock for everything. It depends on the symbol. So you have to check at that time of the day to see what's going on. All right, easy timer break-even examples. So I've focused on this easy timer because we tend to drop in right in the war zone. Okay, like I saw this movie, I think it was called Future War, and they had to fight a war into the future. And they were recruiting soldiers from the present to go into this time portal to fight into the future. And in the movie, when they came in to the battle, they went to the future. They dropped through this portal and they just dropped right into this war zone. It was a pretty cool movie. I think it was on Amazon Prime. But the point is that with the easy timer is dropping in right on the war zone. We are dropping in on chaos of the morning market, okay? So what I've done here is I've made these break evens really, really strict. You can see here, this is the short here. These are two examples of trades that lost, but these things will be out in 1 to 5 minutes. If they're not making money, they're out. So it makes the losses really small. The biggest loss that we had this week was 1.75 points. You can see now, so here's an example of these. It saved it here. You see this short here? It was short, it got out. Look, it would have lost money. Look at this long, it gets out right away, it would have dropped. So you are dropping into massive chaos, massive volatility in the morning with the easy timer. It's kind of like that movie. You're dropping into this portal right into the most chaos. Okay, so that's a big difference. Now let me show you an example of a day that made money. By the way, it was net positive this week, about 10.5 points, something like that. This is an example of a short. It had just a few bars to go. It has to make money within a few bars. This was Tuesday. It went all the way down to the target. Here's a long trade. It goes up and it goes back down and it broke even. Okay. So after a certain number of bars, that thing's done. So we're really focusing on getting the risk down. Okay. So I don't want these easy traders to hang out there anymore. It either goes or it doesn't. That's it. Okay. And you're going to have really tiny losses, which is good. So I'm happy this week. Look, it made money. It was the first week we've really been doing this with the tight stops, but that's important. Okay, so that's an example of this. Now, fast fed break-even examples. This is the fast fed. Now I'm going to show you what this would look like. Now these are bigger bars. These are 4-hour bars, but here's an example. Okay, so here's a trade. This is hypothetical, by the way. This is not. These were not actual trades that were posted. These trades here on Monday and Tuesday, these were posted in the service. This is a hypothetical. I'm working on this, so this is just so you know. Here is the trade. So here's an example. This is natural gas. Okay, so this one goes in July. So it runs up to this target. We're going to be focusing on bigger targets. Okay, but now this one goes short here. So you can see it's short here, and it passes a certain number of bars, and it's hitting that break even. So instead of saying short all the way up into here, now it's got to go quickly. Okay, and so that's an example. So this is what it will look like on the fast fed. So this is an update, and I found that the break evens do not affect the signal as much. If you start putting tight stops on these things, the signals get all crazy. They don't work. Typically, this is why the Fed's use doesn't have stops or targets, because it doesn't work if you use stops or targets. But this is different. This is the fast fed. This is for the platinum service. This is an example. So we're focusing on reducing that risk and getting those trades out quicker at break even. It's a process. I'm still working on the fast fed. The easy timer is ready to go. And then the K2 is also going to be working on this. So let me know if there's any questions and I will move on. If there's no more questions, I'm trying to address each of these concerns and questions, let you know what's going on. There's a lot of news every week, guys. So it's good. It's important that you tune in if you're a subscriber to find out what is the latest and greatest information here. And this is your chance to interact with me and to ask questions if you have questions, okay? As you can see, a lot of stuff going on, but let's keep going here. I want to talk about Uranian, okay? This is Uranium Astrology. I'm going to give you an example of a chart that we would look at. Now, at the beginning, this has nothing to do with the market. This is just pure Uranium Astrology. Uranium Astrology was a type of astrology developed by a group of Germans in the early 1900s. They took astrology to the next level. They brought in more points and they focused on very precise midpoints. Okay. That's the big picture. But at the beginning of this month, I talked about charts of Olympic athletes. Okay. And I thought up in my mind, what, if you're talking about the all-time greats, what should they have in their charts? What should it be? So I was like, well, they have to have a strong Mars. Mars has to usually be on the sun. That's also the sign of the soldier. They have to have Kronos, which is mastery, and they have to have a connection with Apollon. Apollon is fame and honors. And when I did these charts, it showed up in every single person's chart that was a famous Olympian. I'm talking about the greats. I'm talking about the all-time gold medals have these charts. So I don't know if you guys know, but this is a chart. This is Allison Felix. I'll get out of the way here so you can see this. She just broke Carl Lewis's record for 11 Olympic medals. Now, she's older. She had a kid. She's making a comeback. Everyone counted her out, but she has the chart here that I talked about that all of these Olympians have, okay? I'm going to show you. This is her sun here. So sun is here at 15. Mars is at 25. It's making a midpoint to Apollon. There's the energy. Sun, Mars, Apollon. She's also making a connection here to Kronos at 13 degrees. Guys, it showed up in every single person's chart. I went down Michael Phelps, Simone Biles. You talk about greatest of all time. Michael Phelps has it. Simone Biles has it. I talked about Sydney McLaughlin and Dalilah Muhammad at the beginning of this month. Now, this is all track and field. You may not, sorry, this is swimming. This is gymnastics. This is track and field. These are Olympians. These two have such high charts in terms of the Kronos and the Apollon that every time these two meet on the track, they set world records. So when you have that combination in the chart, guys, when you have Kronos showing up, you are at the top of your game. If you take a player like LeBron James, best player in the world, his sun on Kronos. Guys, you can't see this with regular astrology. So this is the kind of stuff we talk about. And it's just, even for me, guys, even for me, when I pull up these charts and I see the energy showing up again and 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 again, the chances of this are astronomical. It's like winning the lottery to see this kind of type of energy show up to the exact degree in every single person's chart that I pulled up. Just like I pulled up earlier, I talked about what do billionaires have in their charts. They all have the same thing, Jupiter, Apollon, all of them, all of them. I went down the list, 10 billionaires, and I'm talking about exact degrees. I'm not talking about, oh, it's in this sign, it's 20 degrees away. I'm talking about exact cutting down the midpoints, exactly hitting these points. So this is really cool stuff. I mean, it has nothing to do with trading, but this is something that I love to do. I love to do the charts. I love the Uranian system. It makes complete sense to me, and you get more information with these extra points. So just to put that out there, we have the Uranian newsletter. If you want to check out these charts, I do put a few videos up per month talking about some real life examples, but it's a different way to look at astrology. And so there's just more information to look at. So I just thought I would put that in there because she just broke Carl. And for those of you who don't know Carl Lewis, he's one of the all-time greats in track and field, and she just passed him. But of course, it's in her chart. Even being at the age she's at, nobody thought she could do it. But when I looked at her chart, I was like, yeah, she's going to medal. There's no doubt about it. Okay, I figured that just based off of her chart. Anyway, all right, moving on. Let's get back to this talking about the stock market here. So gold standards. So when we talk about the gold standards, we're trying to simplify the process of what we do. So what we're doing now might look completely different than what we did 3 months ago because I'm trying to focus on what is working. The market's changed, the market's evolved. You can't just have a static approach to things. You have to be flexible and adaptable. And here is our friend, Mr. Sagittarius, Bruce Lee. He was the dragon, Chinese sign of the dragon, but his whole thing was freedom and not being tied down, which is very Sagittarius. He was the stage actor, which is Sagittarius. He was the traveler, which is Sagittarius. I mean, he had all of this. He was the philosopher, which was Sagittarius. And but he had a bunch of Scorpio in his chart. So he was striking with precision. I studied his system. I met his original students. I met so many people back in the 90s. I met Ted Wong, Dan Inosanto. I even went to Ted Wong's house. I saw the level 3 certification on the wall that Bruce Lee wrote to Ted Wong. Cool stuff. But he influenced my life. So these are the gold standards for the S&P. Fed use internals, double optimized lunar cycle, and optimized Bradley. They show up on the chart with these arrows. So when when you see these charts here, just trying to clarify this here, you see these charts, the blue is the Fed internals, the green is the double lunar, and the pink is the Bradley. And the double lunars have been doing really, really well, guys. We're fine tuning those two. I didn't even put that in here, but they're doing really well. When you look at gold, when you look at natural gas, when you look at the bond, I mean, they are tracking these double lunar cycles beautifully, these green arrows, because we're going to another level with this astrology-based forecasting, because we're taking it and we're actually putting it into to do a system test on them into the future. All right, so you guys ready? Any questions? Real quick, any questions here? Okay. All right, we will continue here. Next slide. All right, money, energy, currencies, cryptocurrency, stocks, ETFs, gold standard. Okay, so Fed Juice 3.0, double optimized lunar cycle. These are the two gold standards for other symbols. And this week I'm going to talk to you about natural gas. Natural gas has been very good. The red arrows are the Fed Juice here tracking. Has tracked natural gas very well. And then the green arrows are the double lunar. And look at how well it's been tracking this. 629, 728, 716, 721, 727, 83. I mean, it has been very good. This isn't even the best chart. The best chart is probably gold right now or the bond. These double lunar cycles are doing really well. So that's an example. We take these top two that are performing and we focus on them. Now, things don't always work. Like gold this week had a breakdown on the Fed Juice. Gold miners didn't, but gold did. So, I mean, it doesn't, it's not, the stuff isn't 100%, but for the most part, if across the long scale, they're doing very well. Talk a little bit about the stock and ETF service. We talk about this each week, just a daily service. There's a Fed Juice 3.0 signals on this. The signals are updated daily on the website. So you go there. I do notify you on Twitter. So on the @Wolftrader FUTU1, I notify it when this is ready. The service is broken into two parts, the stock portfolio and the meme penny stocks, which I'm going to be adding these soon. But I want to get this up to 10 different stocks. So the whole point of the stocks is the stocks, they appear to work better than the futures. And I think the reason is I just have a larger universe of symbols to choose from. They don't all work on all symbols. So this is why I'm trying to slowly add these. I want highly liquid stocks. These are long short positions. There's no stops or targets. Assume $10,000 per symbol. Currently 6 symbols. I'm going to build up to 6. The only thing I would recommend is that you wait until a new signal comes rather than just jumping in the middle of a signal, unless you feel like there's a good entry point, because sometimes these things can float around for a while. Meme and penny stocks are the same thing. We're just focusing on long and short positions. It has to optimize well with the Fed Juice. No stops or targets, and then not part of the main portfolio. So weekly you get daily statistics, which are the highest probability moves, the big moves and the reversals. Daily you get closing bell, posted, Fed Juice signals, the best RSI, and then notification on Twitter, as I said. These are the stocks that we have right now: gold miners, Apple, Tesla, Caterpillar, Broadcom, Bank of America. Now, if you guys want to see more symbols, let me know and I can add them. But you gotta kind of just let me know ahead of time what you want to see, and I will check them out. I can't guarantee that they will work, but I will definitely give it a look. All right, so how to sign up, just so you know, you can go to the website. It's for non-newsletter members, it's $59 a month. For current newsletter members, it's $49 a month. So you get a discount. So if you're a member of one of the services, you can get a discount on this. This price is lower than the other services because it's new, okay? It's new. There's still bugs I'm working out. I'll explain a few bugs in a minute. But for the most part, it's going forward. When we get to about October, like the end of October, the prices on this will go up. So if you sign up at this rate, this will be your locked rate. So as we're adding more symbols, there will be more features coming up into October. I'm going to go into the charts here. Now, let's start out with gold miners here. This is what I call the ETF GOAT. This is the greatest of all time. This is a very good, very, very good chart for the Fed juice. It's just been hauling in the money, and it continues to perform. You can see here, it was in this sell from 7-1 all the way over to August the 2nd here. And um, it caught this turn here. The gold futures, this actually trades better than the gold futures in some ways. Um, at least recently it has been. You can see here 8-2, it goes into this buy right here. And then on 8-4, it has this turn and it catches that whole collapse into gold. And then it goes into a buy on 8-6. So this has been really, really good. This is the greatest of, I call this the GOAT. This is the greatest of all time in terms of ETFs. This thing is incredible. I mean, it has a history going back to December, and it just keeps, it doesn't let down so far. Across the long term, I mean, it can have losing trades, of course, but across the long term, it's doing really well. Now, gold is coming up to the end of its seasonal pattern here. We're getting really close here. So, uh, you know, it's disappointed for sure. Gold has disappointed. It's been diverging negative. The seasonal pattern has been going up and gold has been going down. That's not a good sign. But anyway, we'll get to gold in a little bit. This was a graph of the history graph of this. If you invested $10,000 back in late December, it's been trending up and it's even higher now. It's just, I didn't update the trades. I will update them, but it's been very consistent for us. So I'm very happy with gold miners. Apple has been really good too. It started out with this big run here. So it starts out with this big run on 6.8. It runs all the way up into 7.26 here. And it's just been kind of just going around sideways here. So Apple's looking decent. Tesla's been very good, consistently good. You can see here, it's been catching these turns throughout the month. Now keep in mind, these are ideally made to run about 25 market days, which is a little bit over a month. I will update these if I feel like they need to be updated. I'll re-update them every week or so if I need to, but they can go up to a month. Stocks are a little bit stranger because you have earnings information and you have news spikes and things like that that are concentrated on one company where you don't have that in markets. But you can see here that Tesla has been doing a good job of catching most of these rolls here. There was this one trade here where it got wrong, 729 to 82, but 84, it's short. It's still short right now. So that's a good one. So I would say these are the top three right now. There is one that I think is going to overtake these, which I will get into. But next one is Broadcom. Broadcom's been kind of just drifting sideways. I don't know. It went short here, went long here. It kind of just did this big break-even trade. And this is why I'm talking about best to wait for the new signal. Because if it goes short here and then you go short here, you've missed most of the signal. And it just kind of drifted back up. So whatever. It's just a whatever right now. That's a whatever. Sometimes they do that. Sometimes they just kind of go sideways, but it's not getting tanked. That's the thing. It's not getting run over. It's just kind of just doing nothing, which is okay. Doing nothing is okay. Getting run over is not okay. I mean, it could do sideways for a month and then take off the next month. So Caterpillar started out okay. It's just kind of a whatever right now. It started out good. It picks up this run here. It goes short here. Then into here, it goes long. It lost here, and now it's currently long here. So overall, okay. I'd say okay. It's not a whatever. It's okay. I have a lunar cycle in there too, which this is probably one of the best lunar cycles I've ever seen on any symbol, and that's why I threw it in there. I think this lunar cycle on cat it's let me put it to you this way. It optimized really hot. I optimized it and then I ran it out of sample for many months and it did extremely well. So I'm going to keep putting these lunar cycles in here too on cat so you can check those out. And then Bank of America, this is one that I think in the end will overtake. It'll probably get up to around Apple. Now there was a glitch on Thursday. The data came in wrong on this, and when I rebooted the computer, this was supposed to be a buy on Thursday, but I couldn't update that because it didn't, it was after the fact. So just to let you know, though, I mean, I'm having it going long here on 8.6, but technically it went long on 8.5, but I can't put that on the chart because that's not what I posted, right? This is all timestamped and posted on Twitter. So anyway, so just to let you know, that was a technical issue, it's a data issue. But I think Bank of America is going to be up there. I think it's going to be up there near Apple, and it's probably going to be the second or third best one. I think ultimately this is going to be a good one. So just something to consider. Is there any questions about this? Let me know if we have any stock and ETF members here. Let me know if you got questions. I see the chat going here. Let me see if I can read these chats here. And then we will keep moving on here. Okay, so no questions so far. All right, so we went through a lot already. We've gone through, just to summarize for people who are just getting here. By the way, if you're just getting here, I'm Shane Smoleny from Wolftrader Futures. We are talking about our service today. So just to review here, we talked about the new ETF service. We talked about break-even signals on the easy timer, break-even signals on the fast Fed. I talked about the money show coming up. So if you're interested in that, that is coming up on, it's coming up on, I'm going to show you this one more time here. This is going to be on the 24th to the 26th. It's a Money, Metals, and Mining Virtual Expo. It's free to sign up, so go ahead and sign up there. You can register, get a spot. And I'm going to be talking on August 25th from 1 to 1:30 about how to balance the Fed use and seasonal patterns for metals. So this is it's kind of a good workshop. It's focused just on this topic. And so, just drop by if you get a chance. That would be great. And then we talked about different systems. We're remodeling the K2, the fast Fed. We're remodeling those for break even. Streaming crypto is coming. This is a big deal. I'm going to have streaming crypto for all of these symbols now. So we're going to have more Fed use coming for Ethereum, Ripple, and Litecoin. So if you are a crypto member, you're going to start getting more Fed use, and the signals are going to get more accurate with this. And then the microcycles were added, and then the newsletters available. Okay, so keep going down the line here, and I'm going to take you now to market update. Market update. Let's talk about the S&P. Our good friend here who has been giving us a hard time. Let's go into it. So, Fed use internals remain in a sell. S&P is running against the internals. Fear and greed is peaking with price, and August is a negative month. So, I'm going to show you a few charts now of history of what has happened when the weekly Fed use runs against the S&P, okay? And I'm going to just show you the history here because we now have the Fed use sinking on a weekly time frame. We haven't seen this in a while, and it has always showed up in the market. Sometimes there's a waiting period, but it has always showed up. All right, so this chart right here, let me explain to you what this is. This is back in 2011. I have more charts to show you, but I'm just going to show you this one first. 2011, when we had the summer crash. So you can't see this, but this is 2011 up into here. And this arrow showing the weekly Fed use dropping like this. Okay, weekly now, weekly, not daily. And you can see the market completely rolls over and follows this weekly Fed use. Okay. So when we start to see weekly deflections like this, it is not good for the S&P. Or at least the history of this is not good. Okay. The history of this is bad news. Bad news, guys, when this happens. We can go back and look at this again. This is 2012. This is 4/6 of 2012. You can see it starts deflecting down like this, and the market starts falling down with it too. Okay. And even though it keeps falling, the market tries to go up, it falls back down again. Okay. Market cannot do anything without the Fed since 2009. That's the history of it. I don't think that's going to change, guys. That's just my feeling. We do have stimulus in the system now, though, from Congress, so that's a little bit different. We do have that coming in. It's probably helping out in the background, but I don't see these patterns changing. Okay, it's just it's inevitable. It's a matter of time. If this keeps going on, if the Fed keeps pulling back like this, when you see this, it's trouble here. Now, the only reason this changes into here, for those of you who remember, this is the LTRO. This is the long-term refinance operation. This was going on with Europe and the Fed, and Europe started up with it, and they got this rally into here. But then when they pulled back, markets fell right away. Okay, so that's the past. But let's look at what has happened recently in recent history. What is going on? What can we look to? And you guys got to understand, we're talking about weekly time frames here, weekly, not daily, weekly. So a lag of a week or two, right? That could seem like forever right now. If you're in the market and you're waiting for it to go down, that could seem like it takes forever if it's a weekly time frame. So here we go. You ready? This is going back. This is 2018. I'm just going to show you some recent history here. This is 2018 here. This is 2020, and this is now 2021. Okay, so 2018, the taper tantrum, right? They start tapering, start pulling back on a weekly time frame, and eventually the market caught up with this. You see this right here? Eventually the market catches up. Okay, it's just a matter of time. It will come down based upon what it's been doing. Every time that this has happened in the past, it has come down. It took a while for this, by the way, when they did this in 2018. But remember, they had been going up for so long here. It took a few months. They were dropping, and eventually it came down on them. And then Jerome Powell had to reverse his attitude towards this and started ramping the juice again, and the market starts going up again. Now, there is one time here where the market goes down on its own, but that's COVID. It took a natural disaster. It took the global economy to shut down for that to happen without the Fed. But eventually the Fed came in with all these record purchases. You know, they did the amount almost in one day that they're doing in a month now. And it started going up again. They turned it around, all this stuff. But look here. This is right before the election on a weekly time frame. They started to pull back again. Okay, it took a couple of months, right? It took a couple of months. So it took July, August before this starts showing up, 2 months. They start pulling back, and then it shows up here. You see this? It shows up. So this was the bottom right here. After the day after the election, they start juicing it again. Okay, start shooting it straight up again. Okay, so look at where we are now. We have a huge deflection down. In fact, the velocity of this drop is greater than this velocity here. Okay. This one, you can see this one was much more gradual. This was a taper because they were trying to pull back slowly here. This was a big pullback, and I think my guess, I don't know the thinking of this, what the Fed thinks, why they do it. I don't know. I just know that I track it. Maybe they felt that it was running too hot after COVID and they needed to pull back. Maybe they feel like it's running too hot now. Maybe they feel like inflation is too high. I don't know. But I do know that this has shown up every single time this has shown up in the market. And it's shown up for a couple of months, not just a couple of days. When you're starting to see weekly deflections like this is a big deal. So I've talked before about daily pullbacks and this. Okay, that's nice. This is totally different now. We're talking about weekly time frames. We're talking about monthly magnitudes of weakness. Now the market is defiant and made a new high on Friday. Okay, but this cannot be ignored. This is real. It's here. We're going to have to deal with it. Now, unless the Fed does a 180 right now, a U-turn, and starts pulling this back up, which they could do, and believe me, guys, I know that would suck if you're short on this thing. That would suck, but they can do this if they want to. But I don't, the only thing is I can't tell you what they're going to do. I can track what they're doing. I can't tell you what they're going to do. I can't tell you why they're doing what they're doing. I can just track what they're doing. And I can plug this into the Fed juice and we can get signals from it. Okay? So that's what's going on. This is not a little thing to sneeze at. This is a big deal. Every time this has happened, we've seen a pullback. So I'll stand by this because it's happened every time. It's happened every time since 2009. So I know that the market is just doing its own thing and, it just kind of keeps going up, but I'll let you know about that. Now, let's talk about our divergence. I'll get out of the way here. This is continuing to happen. I'm just letting you know. You can take from this what you want. Take it seriously or not so seriously. Every time the S&P has gone up while Apple has gone down, you can see here, a market correction has followed. This is 2.8 here and 5.3. Same thing happens. Okay. S&P's going up. Apple's going down. It shows up down here in the divergence indicator. Correction. Okay. So what's happening right now? Same thing's happening. If you go right here on the S&P, you can see S&P still cooking up. Apple's dropping. See that? This indicator is about to cross. I think we're a couple days away. It hasn't crossed technically yet, but it's getting close. So just something to be aware of. This is a pattern that has repeated in the past, in the recent past. And so when we see technology getting weak relative to the S&P, it can mark corrective periods. So it's kind of like something coming into focus really, really slowly. But a lot of times when these turns happen, they're sudden, and you can't. They're unpredictable. Like the market never tips its hand, but you can see these warning signs coming in here. I'm concerned primarily because of what's going on with the Fed and the pullbacks, the Fed juice. But these are other signs that are showing, hey, be careful. Be careful. August is a bad month. Okay. This is daily stuff. This is daily Fed juice here, pullbacks. I've showed you this on the daily time frame, but the reason why I went back to that weekly time frame was to show you that these things will show up. It may not show up like instantly now, but it will show up if they keep pulling back like this. Now, I'm watching this daily to see if this turns back into a buy. It could just go right back into a buy. But as it is now, it's not. It's still in a sell. So we've still got 3 sell signals in effect on this market. And again, I know it's crazy because it just keeps going higher. It's doing its own thing. But if we study the history of this, if we study the history of what's happened with the Fed, if we study the history of these divergences, if we study the history, even this double lunar cycle, guys, has been really good. Even on the S&P, it's defying this. If you go back to 6-7 here, this is the double lunar cycle here. This thing is really getting sharp. So double lunar cycle here, 6-7, 6-16, 6-30, 7-16, 7-23, 729 does a little wiggle here, but now it's in a sell. I mean, this thing has been good. This is in a sell. Optimized Bradley has been really good. It's in a sell. This Fed juice here, these internals, still in a sell. So, okay, could they fail? Yeah, they could. But I feel that because the Fed juice is sinking and sinking and sinking and sinking like this now on a weekly time frame, that I don't think we're going to be able to run away from that. I think that's got to be dealt with in the market at some point. It may not show up next week or the week after, but at some point, if they keep doing this, it's going to show up. If you go based on what the past history is, this stuff shows up. Okay. So that's the S&P. So I hope that gives you like a big term perspective of this, but what we're dealing with right now is pretty serious in terms of what's going on with the Fed. I don't know why they're doing what they're doing, but I'm just tracking it, okay? And I can tell you what has happened in the past. All right, so metal summary here. Metals are lagging. Gold has wasted most of the positive seasonal. That's been super disappointing. The gold Fed juice is still in a buy. A possible near-term bounce is still possible, but we are coming to the end of the road here on these seasonals. So even if you get a bounce here, the double lunar goes into a buy on Monday, and you might get a couple of weeks of a bounce. But it has been severely disappointing to see this market not be able to go up when it's supposed to go up in the seasonals. And that is, that could point to trouble down the road. So just letting you know. This is gold here. Now, I'm going to show you something here. Now, remember back to our gold miner. The gold miner, like I said, the gold miner picked up that turn. This Fed juice did not. So let me go back to the gold miner here real quick, to the GOAT. Now, the gold miner, this is the ETF. The gold miner picks up this turn here. You can see here on 8.4, and then it goes into the buy on 8.6. The Fed juice just stayed in a buy. So do we know that the Fed juice missed it completely? It hasn't changed into a sell yet, but it definitely did not catch that move. And like I said, these things are not 100%, but it's still in a buy. And so that, with the fact that the double lunars in a buy on Monday, tells me that gold might try to do a bounce here. But it's running out of time. I mean, it's really, really running out of time with these seasonals. So, looking forward, I would say gold could have some trouble into the fall. It really could. This is not what you want to see. You don't want to see price moving against the seasonal pattern, because typically it doesn't do that. Usually you start. I mean, it got a little bit of a bounce here, but this is what I'm going to talk about on the Money Show. How you can tell something is wrong when you got this seasonal pattern going straight up and it doesn't want to respond. That's a negative divergence. And so these divergences give you hints about the future. Now, what I do want you to focus on right here is that we've improved this double lunar cycle, what I call the fine-tuned double lunar here. And this has been picking these turns up since 713 here, 722, 726, 730 picks this up. So this month going forward, these have been further improved. They're fine-tuned now. So fine-tuned double optimized lunar, and they are looking good. They're looking good on many symbols. So I'm very happy with how this is progressing. Like I said, everything doesn't go well all the time for every symbol. Obviously, the Fed juice missed this, but it's still in a buy. So that means that with this buy signal Monday, gold could try to do a little bounce here for a couple of weeks. But the problem is, long term, time is ticking on this. Now, we also have the optimized Bradley on this, which is a whole nother topic of discussion. I put this out for subscribers to give longer term forecasts. But just focusing on these two right now, I would say gold's in trouble. I mean, it just has been very disappointing. All right, so any questions? Any questions? Any questions? Okay. All right, real quick, some crypto. I got to tell you something here. Bitcoin has, first of all, just to tell you guys again, I'm getting streaming crypto now for every single symbol. There's going to be Fed juice now for Ethereum, for Bitcoin, Ethereum, and Ripple and Litecoin. It's going to be Fed juice coming for those. The Fed juice, because we've had limited data, has not been as responsive on this, but still okay. What has been really good is this solar cycle. You can see here the solar cycle has been falling. You see Bitcoin falls. This is when Bitcoin did its big fall here, right? Now notice when the solar cycle jumps up like this, notice that Bitcoin jumps up, follows that solar cycle very well. So, maybe it's because it's new, it's not as corrupted, but it's following the solar cycle very nicely. Now, Bitcoin still has more negative coming on the solar cycle. So there's still more negative coming on this. So it will be interesting to see what happens to Bitcoin in the next few weeks, if it can hold up here or if it's going to plunge back down and try to retest those lows again. But the solar cycle would suggest that it is going to try to do that. So just something to point out there. Now, we do have one more area of research that we're working on, which is the astro inversion model. So this is really cool. This is not the double optimized lunar cycle. The double optimized lunar cycle is just a lunar cycle that's optimized to the future. So we're not just depending upon the past with the double lunar. We're actually optimizing it with a special look forward technology to make it more accurate. This is different. This is saying, like everybody says, oh, I trade the Bradley, but it inverts, right? So the turning points are what you focus on. You don't know what direction it's going to turn, but you just know that that's a turning point. Okay. I used to think that was nonsense, that It just wasn't accurate enough. But I have learned that since that's true, these models do invert. Okay, so there are times when the astro models invert. Um, but the question is, how do we know when they invert? So we can see and measure when they're inverting because they're going against the cycle, right? They're going against the cycle. So this is something I'm working on, and it's going pretty well. So S&P here, this is the astro inversion. So this is the cycles that we put up. This actually showed up on the actual service. We post this each day. So these are we started tracking it on 629. 629 it goes into a buy. 7.6 it goes up here. 7.6 it goes into the sell. 7.21 goes into a buy here, and then interestingly enough, it just hits this high on 7.26. So it's just still sitting out there as a sell. It's done pretty well so far. I'm pretty happy with it. The idea is that when it inverts, like you can see here, so C7.6, you see the market is going down. You see it picks up the inversion. You can see that the cycle is going up. You see that right there? They're going in opposite directions. It's inverted. So when it's inverted, you get a purple cell. That's why the arrows are different colors. But this is like the holy grail of cycle analysis to figure this out. And then this also goes into that technology, that's that special look forward technology that we have to figure out when is it inverting, and then how do we use that to forecast into the future. So anyway, it's something we're working on. I posted each day for you guys to see. Gold had been doing well, didn't pick up that turn. But interestingly enough, I guess we will say, first of all, this starts out back here 629, 71, 77. So gold has been kind of goofing around here, but it's still in a buy. Definitely not as strong as the S&P right now, but it's still in a buy. So, I mean, look, on gold, I would not be surprised if gold tries to do a bounce here in the next couple of weeks. The question is, after the next couple of weeks, what happens on gold? So I am not feeling too good about gold right now coming up into the fall, because that is the negative seasonal. And I just posted the new solar charts today. So for those of you who are subscribers, I just posted the new solar cycles for gold on the website. So if you're a gold or platinum member, I posted those up so you can see them. So you get that exact turning point date. But I know we covered a lot today, guys, and this is a chance for you to ask questions. So a lot of what I'm doing here is to make this a webinar to let you know what's going on with the service, and then to answer any questions that you might have. We covered everything from new topics on the service, the money show. Again, if you're just joining us now, I'm going to be on the money show on August the 24th. This is the speaker schedule that I'm going to be doing. This is the Money Show, Money, Metals, Mining Virtual Expo, August 24th to August 26th. I will be speaking on August 25th from 1 to 1:30 on how to balance the Fed juice with the seasonal patterns. So this is what I'm talking about with gold. Like, something's wrong. Like, it should have been going up, and I've been saying this. Like, something is wrong. It's been wasting these seasonal patterns. And the fact that we're almost at the end of the seasonal pattern on gold, it's a problem. I think it's a big problem for gold. It's going to take some kind of major event to turn gold at this point, because it tends to follow the seasonal pattern. When you look at gold, typically it tends to follow the seasonal pattern, and it's not doing that. Okay, it's not doing that. Like I said, there is a cycle low coming in on 8-9, and these double lunar cycles have been really good. So it wouldn't surprise me if Monday gold tries to do a little bounce. But after that, September, October, November, I mean, it's diverging negatively against it, right? And then just to summarize again on our S&P here, trouble on the weekly time frame, definitely trouble. And I went back and I showed you, I'm just kind of summarizing right now, but every time you go back and you see this on a weekly time frame, when this thing starts deflecting down, it's a problem. Okay, it shows up. It may take a while to show up. It's going to show up on a weekly time frame. There's no escaping this. Like, if you go back in the past and you look at this, There's not one time when this has happened since 2010 where the market, it didn't show up in the market. The only thing different I would say this time is there is, like I said, there is stimulus coming in. There's stimulus checks coming in still to the homes. There's all this extra stimulus coming in other than the Fed. But I don't think you can ignore this. I think there is going to be a problem here with this. Here's a question. Okay, we got our first question here. So I'm going to take it to the questions now. So uh, first question here. Do you think gold is being manipulated? Um, I don't think it's going to be manipulated directly by the Fed, but of course that's the age-old question. People have always felt like gold is the most manipulated market on the planet. Um, I don't know because I only go by things that I can measure. Okay, I only go by data that I can measure. So if, like, for example, if the Fed is doing something behind the scenes, I can't see it. If they don't put it on their books, I can't see it. So I mean, is gold manipulated? I mean, a lot of people feel that way, but I don't have any data to prove that one way or another. Okay, will COVID Delta response force the Fed to juice it again? Um, I mean, if they start shutting stuff down again, yeah. But keep in mind, so yes, the Fed will respond. Of course, they will respond. But what I would say about something is this: when you first faced with something, and I go back to this. I'm going to go back to some of my teaching days here. When you first experience something, you tend to deal with it when you're at full strength, right? And you're afraid. And this goes back to like when we would start a new program at a school, and there was the first class that would go through was always the strongest class. Always. When you go back, it gets worse and worse and worse through time because they took it seriously. They were scared. They were the first people to come through. I think that if we get another response, another virus, I think our first, because we hadn't experienced that before and we were at full strength, I think we recovered quicker. I think if we got another global shutdown, I don't think we would recover as quickly. Even if the Fed comes in, I think the second, and a lot of it's expectation too, because they might look back and say, oh, well, the Fed saved us and the Fed could save us again. Whereas last time it was like, the world was going to end. That type was a fear. So I think if we did get another Delta, if we did get something, I think it would be harder for the Fed. Now, will the Fed respond? Yeah, they'll respond. But what they did here was incredible. I mean, I don't know. I mean, it's just to see them do that again. I think they would respond. I think they could turn it. But I think if you do get any type of a major event, it gets harder the second time. People get more fatigued. You know, there's a lot that people are weakened right now. We're still in a fragile state. We're still recovering. So I don't think that would be good if we got a second Delta for sure. I don't think it will be. I don't think the response will be as strong. I mean, I think the Fed will respond as strong, but I don't think the markets will respond as strong as the first time. Okay, next question. Any questions? Any questions? Okay, so I'm just summarizing again. I know we covered a lot today, but this was the divergence here with Apple and the S&P. Daily Fed use still plummeting. I think there's every reason to still be worried here, guys. I mean, I just, unless you're going to argue that somehow magically the market's going to do it on its own when it has never done it on its own since 2010, not even once, then now something's different when the economy, I mean, the economy is coming back in terms of jobs, but we're still relatively fragile, guys. I don't, you know, look, I'll see it when when I see it, I'll believe it. And remember, these things can take time to develop. As I showed you on the weekly time frame, this can take time to show up. This can take time to show up. All right, guys, so just to summarize again, first of all, if you're here, go ahead and give us a thumbs up and subscribe to the channel if you want to see more content like this. I would appreciate it. Everybody would appreciate it. We're going to get more recommendations with the YouTube algorithm, and we'll be able to keep coming up with content like this. If you like the content, please go ahead, give us a thumbs up, and subscribe. Subscribe to the channel. And just to review here all the different services we have many different newsletters: S&P, metals, energy, currency, cryptocurrencies. And on the cryptocurrencies, just so you know, just to review one more time here on these cryptocurrencies, we have now live streaming data. So everything's going to change. We're going to have Fed use now for more than Bitcoin. We're going to have Ethereum, Ripple, and Litecoin Fed use. That's a big deal. Stock ETF service, we went over that. We went over all the different symbols, how they're doing. I think there's a lot of promise here. It's still available at a very good rate right now. The rates on these will go up in October. So you still have some time. Check it out if you haven't. I think it's going to be worth your time. Also, if you want to get all of these, you can get them with the gold. The platinum membership comes with the different trade services. We talked about these today, how we're focusing on making the risk smaller with break-even levels. So that's a big change now. So we're working on this. We also have a pairs trader, guys, a pairs trader where we trade. Right now we're trading corn and wheat, but I think I've got it down. I'm going to show you an example of this. Sorry, I didn't bring this up, but let me show you what this looks like. The pairs trade. And this is cool. This is a cool topic here. Let me just zoom in on this so you can see it. This is the pairs trade here. So the pairs trader shows you the relative trade between both of these. So I picked two assets that are relatively correlated like this. So I picked corn and wheat. And you can see here, so these are the last few trades. They've been cleaning up a lot. Wheat goes into this buy on 723, corn goes into a sell. So essentially, you're long one, you're short one, you're long the other. So it's always trading in a pair. These are highly correlated assets. Corn goes into a buy in 8.5 and wheat goes into a sell in 8.5. So this is something that we've been tracking. This has taken a long time to get right, but I think we finally got this down in terms of the actual algorithm, how to run this. So I'm going to be looking to expand this. So I know a lot of people like the pound yen. So I'm probably going to add the pound yen pairs trade next. And then we will look to add to this too. This is something that's available in the platinum service. I like the pairs trades personally because you've always got another position offsetting it. So the risk is smaller and they're not, it's not so much of a stress where you're sitting there focusing like you are with smaller trades. It's just kind of like a slow boat type of a trade to look at. So that's there. So that's the pairs trader. The K2 is going to be coming back online next week with the break evens. And of course, all of these services are grandfathered in. So when you sign up for a service, first of all, you're going to get your rate locked. So whatever you sign up at now, that's your locked rate for life. So it's not going to go up. And the one to really focus on right now is the stock ETF. This is the one that's still relatively cheap because it's new. So if you lock in that rate, that's going to be your rate locked for life. It's not going to go up. And then if you are the platinum member, you get your rate's going to be locked. And then every service that I add, you're grandfathered in. So it comes on, you get it. So no matter what new service I add, you get it all the time. So if you're platinum, once you sign up, anything from the future, as this grows, you're included in terms of services, okay, like trading services. So, all right, so I'm going to go to some questions here to see if we have any last questions. So gold reacted to the rise of the dollar. Do you think the dollar to account with working with the charts? Oh, good question. Yes. Yes. That's a great question. You know what I'm going to do? I'm going to take you to the dollar juice chart. Let's go there. That's a great question. So gold reacted to the dollar. So let's look at the metals closing bell. And I'm going to talk to you about the dollar juice. By the way, guys, I will drop some more hints to you here. I think the dollar looks set to go on a run. So give me a second here. Okay. We have something here called the gold dollar juice. So the dollar juice tracks what is going on relative to the dollar. So how is gold reacting relative to the dollar? So you can see here that this is the gold dollar juice here. You can see here that the dollar juice goes into a sell on 721 and has stayed in a sell. You see that? So the gold dollar juice has remained in a sell here. Look at that. See that? That's crazy, right? So if you're interested in how gold is reacting relative to the dollar juice is something to look at. Now, the Fed juice had typically been outperforming the dollar juice, but we do have it. So if you want to look at the how gold is reacting to the dollar juice, go to the dollar juice on the metals chart there, and you will see um, how that's going to react. So that's a good question. Okay. Uh, Gold did react to the, okay, so the question is, I thought gold reacted to the jobs report. It did, but it reacted, so gold, so the jobs report affected the dollar, dollar affected gold. Okay. Those two, those two run contrary to each other. And lately gold has been very sensitive. So it wouldn't surprise me to see gold try to do some type of a short-term bounce, but we will see. All right, guys. So just to wrap it up here, if you have any questions, keep posting those questions, and I'm just going to go into how to reach me here. You can reach me at Shane@wolftraderfutures.com or www.wolftraderfutures.com. You can also reach me on YouTube at, let me just change this, Fed Juice. Let's go with fedjuice.net for now. You can reach me there. YouTube, Wolf Trader Futures, Twitter at Wolftrader, FUTU1. And also, we have a private Twitter, which is at Wolftrader1. Okay, so that's at Wolftrader1. That's if you're a gold or if you're a platinum member, it's at Wolftrader1. This is the live streaming Twitter that we do each day. This is the one that streams all day for platinum members. All of the charts are posted there, so it's really cool. So if you're just on your phone, you can just scroll and see all the charts all day, or you can go to the website and download the rest of it. Stock Twits, Wolf Trader Futures, Facebook, Wolf Trader Futures, so you can reach us there. How much is the membership? It depends on the membership. Most of these are, I'll take you there. Well, most of these, you can go to the website, you go to pricing plans. Let me show you where to go. All right, so you go to wolftraderfutures.com, you go to pricing plans, and S&P newsletter is $125 a month, 7-day free trial. This is the one right now, the stock ETF package. It's at a very good rate, $59 a month. It's going to go up, but I'm just keeping it there while we're starting it. It's $59 a month, 1 week free trial. Metals newsletter is $99. Energy is $99. Currency is $99. Crypto is $99. Uranium is $72. Gold membership. This is a really good deal, guys. If you want to get all of these newsletters here, you can bundle them for a very good price, $325. If you want to bundle those, if you want to go for the platinum, it's the gold plus all the live trading systems. That's $545. Free week trial. You can check that out too. Again, all of these rates are locked, and again, these go up because I add more services and more features. So definitely in October, that stock and ETF one's going to go up. So if you want to take advantage of that, it's a good time to get in on that. Kind of like a ground floor type of a deal. And again, I usually start these services low to give people a chance to get on board and to check it out. And so anyway, that's it. So if you guys want to reach me again, Shane@wolftraderfutures.com, www.wolftraderfutures.com or www.fedjuice.net. You can reach us there. And thank you so much for coming by. Really appreciate it. And again, we will see you next Saturday at 1 o'clock. And have a great weekend, everybody. I will